Banking is very good business if you don't do anything dumb. Warren Buffett. Welcome back to the channel. Today we're diving into Project Sela, a groundbreaking experiment exploring how a retail CBDC can be accessible, competitive, private, and safe. By the end of this video, you'll understand how Sela proposes a new architecture balancing innovation, security, and inclusivity.
Central bank money forms the core of our global monetary system, offering a foundation of safety, neutrality, accessibility, and integrity. As economies become increasingly digital, central banks are considering the possibilities and challenges of a retail central bank digital currency, or CBDC.
As cash use keeps failing and digital payments dominate, central banks are racing to design digital versions of cash, so-called CBDCs. But every experiment hits the same wall. How do you make digital money that's private, safe, and inclusive, while still keeping banks and regulators in the loop? That's where Project Sela steps in to test a new balance between innovation and trust.
But designing a well-functioning retail CBDC system is not a simple task. While the central bank will play a critical role in operating the core of the system and ensuring sound and secure payments, payment needs of the general public are diverse and constantly evolving. One way to meet this demand is through a vibrant community of intermediaries who, through open competition, can provide innovative and accessible payment services and handle the large operational burden of customer-facing activities.
One of Sela's innovations is a new class of entity called an access enabler. It provides the user interface, onboarding, and services to end users without ever holding users' CBDC funds. Because access enablers don't hold balances, they avoid liquidity and settlement risks, typical for financial intermediaries. This helps lower costs and complexity and also opens the door to more service providers and more competition.
However, increased access and a greater number of intermediaries could heighten exposure to cybersecurity threats. For CBDC as a critical financial market infrastructure, cybersecurity is essential. With all this in mind, Project Sela tests the feasibility of an accessible and cybersecure CBDC ecosystem through a hands-on building of a proof of concept that is conducted through the lens of policy, legal, cybersecurity, and technology. Ecosystem is designed to maximize access to CBDC for users and payment service providers, while also minimizing the associated cybersecurity risk through preventative architecture design.
One of Sela's biggest breakthroughs is how it handles privacy and security. User IDs are obfuscated. That means the central bank can verify transactions without seeing your personal details. The system is built to be secure from the ground up, not patched later like most payment apps. It's a preventative architecture, not a reactive one, designed to withstand cyber threats before they happen.
The project also aims to preserve the desirable attributes of cash and capture the benefits of digitalization. Sela is a joint experiment between a BIS Innovative Hub Hong Kong Center, the Bank of Israel, and the Hong Kong Monetary Authority. It is also supported by private sector partners FIS, M10, Clifford Chance, and Checkpoint Software Technologies. The main participants in the Sela architecture include a central bank that operates the CBDC platform and RTGS system, funding institutions that manage customer deposits and ATMs, a new type of intermediary called an access enabler that provides CBDC services and all other customer-facing operations, and end users, any entity with retail payment needs. Access enablers play a critical role in increasing access to CBDC services, developing innovative CBDC payment solutions, and intermediating between the central bank and end customers. A defining attribute of these enablers is that they never hold customer funds. This distinguishes them from intermediaries commonly seen in today's systems, where intermediaries need to hold liquidity or client funds on their balance sheet. Consider, for example, an end user named Alice paying with a credit card to a merchant. The funds go from Alice's bank account to her card issuing bank, to the merchant's acquiring bank, and finally to the merchant's bank account. The value transfer isn't instant, and intermediaries need to take possession of the funds or hold liquidity against their commitments along the payment chain. This imposes costs that are often passed to the end user. In Sela's architecture, messages move between participants, but CBDC ownership moves instantly and directly between Alice and the merchant, settled on the CBDC ledger. Since access enablers don't hold customer funds, this may lower the barrier of entry for providing CBDC services, leading to a more vibrant and competitive payments ecosystem.
Think of access enablers like digital gateways. They onboard users, run apps, and handle customer support, but they can't lend your money or speculate with it. This model means lower risk, lower fees, and more competition. Even small fintech startups could connect directly to the central bank's CBDC ledger without becoming banks themselves. That's a big deal for financial inclusion. To test this architect, the team built a real prototype, a working CBDC ledger that proved non-bank intermediaries can connect directly to the central bank system. The results were it worked, instant settlement, secure connections, no credit risk. Their proof of concept showed that Project Sela's model is not just theoretical, it's technically feasible today.
At the same time, this increased access should not come at the cost of greater cybersecurity risks. Sela's architecture attempts to minimize cybersecurity risk by preventative design, paying special focus on careful storage and transmission of user data, authentication and authorization methods that create strong and flexible communication channels, and a risk-oriented redistribution of programmability. Project Sela demonstrates that an accessible CBDC ecosystem does not necessarily come at the cost of greater cybersecurity risk.
So what's the upside? It reduces costs for users and merchants. It brings competition to the payment sector. It keeps your funds risk-free at the central bank. And it could extend financial access to people who would have never had a bank account. But there's a catch. Balancing privacy and oversight is tricky. Too much privacy can block law enforcement. Too little and users won't trust it. Cyber risks are still a concern, and government's rules aren't fully defined yet.
Access to CBDC can be supported by a novel type of intermediary called an access enabler that, through lower barriers of entry, can increase the competition and innovation in payment services. Sela's findings show promise that with careful preventative architecture design, cybersecurity risks can be mitigated.
For central banks, Sela offers a clear lesson. CBDCs don't have to replace banks. They can work with them in a shared ecosystem. The central bank runs the core rails. The private sector builds the apps and innovations on top. That's how you preserve both public trust and market competition. The HKMA and Bank of Israel says these findings will inform the design of future retail CBDCs, including potential rollouts of the EHKD and the digital shekel. Project Sela is more than an experiment, it's a blueprint. Central banks from Europe to Asia are studying its architecture to see how they can replicate its access without risk model. It builds on other projects like Project Arum and Project Roseland, showing that the BIS is quietly building a global playbook for digital currencies. The access enabler models keeps users safe without sacrificing innovation. Privacy and cybersecurity must be baked in from day one. And for central banks worldwide, this could be the blueprint for how digital money actually works in the real world. Project Sela shows that digital money doesn't have to mean losing control. It can mean more trust, more security, and more choice. If you found this breakdown helpful, hit that like button and subscribe. Thanks for watching, and stay curious about the future of money. Peace.